So here we go, another big week in the stock market. I did not want to give the video that title again because it feels like I've given that title to the last two Monday videos. But yeah, it's another big week in the stock market. Obviously, we had my largest position report earnings last week, which was the King. That stock has been on absolute fire this year and crushed the S&P 500, and it's helped me to crush the S&P 500 so far this year. And this week is going to be my fifth largest position that's going to be reporting its earnings this week as well. And hopefully, my feeling is that this stock will be the next stock I own that enters the 100% return club, which is excellent. You guys know me that have been watching this channel for a long time. When I buy a stock, I invest for the long term. And when I invest for the long term, my aim is to try and get a 100% return on that stock in the next 5 years after I've invested into the business. Now, over the last few months, we have had a lot more members start going into the 100% return club. And it's really nice to see once again, because when we had that bear market in 2021, 2022, we didn't have many members joining the 100% return club when there was that bear market. But now we're back in the bullish market. We've got a lot more members joining that 100% return club once again. And I feel like this one, which was one of my more recent investments in the last 2 years, is going to be one of the next ones to get in there. So we'll take a look at that one today and which stock that is that potentially could reach the 100% return club to go join the other many members out there. So I hope you enjoyed the video. Let's get started. Now, just to shout out, if you do want to see more exclusive videos from me, I dropped 4 videos. Yes, that's correct. 4 exclusive videos last week on the Patreon. So you can join through the link in the description for £5 a month. It's the highest subscriber to Patreon members out there on the whole stock market YouTube scene, and you're supporting the channel as well. Now, this made me laugh over the weekend. I don't know if you saw it, but Currys got an offer from Elliott, the activist investor. They offered them 700 million. Now, if you actually look at the current valuation of Currys, it's 533 million. So they actually offer them around about 30% over a premium over what the current stock is valued at. Now, what surprised me is that Currys said they rejected it, and they said that they think the company is significantly undervalued. And I was looking at thinking, are we on about the same company here? Like, you're trading at 13 times earnings, and when you look at Currys, let's be honest, it's not like a company that's on absolute fire at the moment. If you're going to buy a stock or an investment or a business, what do you need to be successful? You need to have revenue growth and profit growth. And then you look at Currys and you're getting anything but that. You look at the profit growth, they haven't made profit since 2018, which is just horrible. You look at the revenue growth is just declining year by year. So you've got a business here that's failing on a revenue and a profitability point of view, but yet they feel like they're significantly undervalued at 13 times earnings. And this was with the company as well, paying a 30% premium on it. I was like, who is that? I mean, if I was a shareholder of Currys, which thank goodness I'm not, because I think it's not a business that you should be invested in, and I personally don't want to invest into it. But if I was a shareholder in Currys, I'd be like, hold on, why have you not accepted this deal? This is a really good premium on a business that's not doing that well at the moment. And let's be honest, are they going to be around much longer? I don't know. So yeah, I was like shocked, thinking, who do they think they are, saying that it's significantly undervaluing the business? I was like, they should have snatched their hands off and run. I thought that was absolutely crazy that came out over the weekend. But we've got another mega week of earnings coming up, and I'll quickly mention a few of them, and then I'll get onto the big one for me. So we've got Walmart, T-Doc that are going to be reporting. Nvidia, this is a big one, isn't it? Nvidia are going to be reporting earnings. Check this out. They're going to go from 0.88 on an EPS basis to $4.23. And look at the revenue growth, 212%. Absolutely crazy. And this year they're actually expected to do 103% revenue growth. I mean, they're so impressive numbers, aren't they? But how long can they keep going? Because the thing is these comps, the more they're going up and up and up, it's so hard for them to keep going on a lot of these tough comps that are going on here. That's absolutely crazy. So yeah, we'll see what happens there. But those it's going to be an interesting one, but those numbers are getting harder and harder to beat. Etsy reporting. I'll be interested to see what's going on with Etsy. Obviously, they laid off a lot of staff during the peak Christmas period, so I want to see if that was a warning shot of how weak their Christmas period was. So yeah, I'm interested to see what Etsy do as an ex-shareholder on the Wednesday. We've got Dutch Bros. That's another interesting one that I'm looking at. And on the Thursday, there's a lot of interesting ones as well. Nicola, I mean, some of you guys that were in the stock market in 2020, 2021, remember Nicola? it's crazy to see them still mentioned every so often. Five is an interesting one, obviously a relatively new stock that I've been buying into at the moment. It has been on a little bit run on a share price point of view recently, so if I were to buy this stock, I need it to go lower. So if it has good earnings but the stock goes lower, that's the perfect position for me, because I get to buy shares at cheaper prices even though the financials are still doing very well. I mean, realistically with Fiverr, if you look at what analysts are expecting is 0.26 up to 0.48. That's a really good improvement on the EPS. And if you look at the sales growth of 11%, yeah, looks very good. So, I mean, if they can, I think the big thing is if they hit these numbers and then the guide in 2024 for an EPS to $2.18 and 12% revenue growth, I mean, that's really good amounts of growth. And if you look at Fiverr at the moment, Fiverr's currently trading at 14 times forward earnings. I mean, if you're looking at a business that's going to do 12% growth and this EPS growth, a company like this shouldn't trade at 12 times or 14 times forward earnings. So yeah, if they do those numbers and the stock goes down, I'll be like, yeah, I'm going to buy some more shares here, because I don't think the share price will stay down here much longer. So I'll see if that opportunity does come up on the Thursday. We've also got Block that's going to be reporting, Booking Holdings, Warner Bros. I know a few of you guys own that one, but the big one for me, my fifth largest position, is going to be reporting on Thursday, which is Mercado Libra, and I am expecting really good numbers from Mercado Libra. Obviously, DraftKings is a stock that I own. That's my largest position. Really good earnings the other day. Stock is up 32% year to date, which is absolutely amazing. Mercado Libra, that's doing a very good year as well. Not as good as DraftKings, but still up 15%, so crushing the S&P 500. And I think I'm up around 70% on my position at the moment of Mercado Libra. Now, looking at analyst expectations, they've got big expectations for them. They're expecting the year ago EPS to go from $3.25 up to $7.08. But look at the range on it. The lowest estimate is $5 and the high end is $8, which is crazy. The reason why is they don't give much guidance on the EPS, so that's why there's always a big range on the EPS guidance. But 37% year over year growth. Now, what I've got to say is actually I had a quick look at next year's, and they're expecting the EPS to go from $21 up to $34. I think it's going to be higher than that, so we'll see if they can hike that guidance up. And the other thing is they're expecting at the moment, analysts, 21% revenue growth. I think they're going to be nowhere near 21% revenue growth. I think we'll be pushing into the 30% by the end of the year. So yeah, I think if they can hike up this guidance, this will be really good. And I think analysts are a little bit lowball in here. And the thing is, when you're going to go from an EPS of 21 up to 34, and I think we might go a lot higher than that, and 21% revenue growth, and like I said, I think we'll be into the 30% revenue growth by the end of the year. The thing is, when you look at Mercado Libra, you might go, oh, it's a little bit expensive at 90 times earnings. Well, the thing is that when you start realizing the growth they're at and the EPS growth, you're going to be looking at Mercado Libra at 45 forward times earnings. And like I said, I think analysts are lowballing. So for me, I think the forward PE is going to be towards the 30 range. Now, picking a company at a forward earnings of around about 30 or high 30s, 38 times forward earnings, and they're doing these numbers, that's really cheap. And for me, I look at Mercado Libra and it's a stock that I've done absolutely amazing on. It's one of the stocks that I really prioritized buying in that 2022 stock market crash. And I've got the results from. It's done absolutely amazing. It's up 70%. But it's one of those stocks that I look at and go, this is for me the next member I look at that should really enter the 100% return club, I believe, in 2024. I think by the end of the year, this will be the newest addition into the 100% return club, because very quickly, these numbers, what analysts are expecting to do, are going to get massively hiked up on a revenue and an EPS point of view. That makes it look even cheaper on a valuation. And then when you start looking at the valuation even cheaper, and then you actually compare it to what it's trading at now of, let's say, 90 times earnings, because it's a premium company. You know, you've got to pay a premium valuation up for this. You know, it's not every company that grows at 30+% and the EPS is doubling as well. So when you're paying up for these companies, it's going to trade at a premium. And even if it doesn't go to where it's at now, which is 90 times earnings, even if it goes up to 50, 60 times earnings, that puts Mercado Libra into the 100% return club. And yeah, I think this is probably going to be one of the stocks that I've got marked down that will enter the 100% return club this year. And I'll be really happy about that, because it's another name that gets added onto the long list. And it's one that I'm really confident in holding in the next few years. And I hope it to be one of my big performers, where it just doesn't come a 100% return, member. I want to see that push towards a 3x, 4x, even a 5x in the next 5 years, because the growth that Latin America e-commerce has is huge. So we'll see what numbers they have on Thursday. You never know, we might have great numbers, and then we might have a buying opportunity on the share price and it goes down on great numbers, and that would be even better, wouldn't it? So we'll see what happens. But yeah, definitely another big one for me. And then obviously the week after, not this week, the week after, we'll also have Hims and Hers reporting as well. So we'll go again the week after as well, which is crazy. So yeah, hope you enjoyed this little preview anyway, guys, and I'll see you on the video tomorrow.